gradual. It really is. It's really quite a gradual thing. If Bitcoin rallied all the way to 500,000 plus, it would still be slightly less market cap than gold. Gold has yet to demonstrate any ability to put a break on monetary printing. So right now, Bitcoin is more of a curiosity for most of the people who are concerned. I think that you will see if it rises too high, yeah, at that point, there will be those who want to squash it. The issue is there critical mass? And the issue is it done in a incremental enough fashion to coexist until eventually it becomes the ability for people to opt out? And like Michael Saylor, I think that incremental likelihood is far more likely to happen. I don't think you're going to get a moonshot Bitcoin going to 500,000 and then the next year going to 5 million in order to replace all global currencies and getting to a Bitcoin standard. I think that it happens from the periphery in. So countries, we've seen El Salvador, very important news this week, El Salvador's bond rating being raised back, basically saying that when the rating agencies cut their bond rating because they adopted Bitcoin as legal tender, that's now been reversed. That's kind of a big deal. If you see more countries on the global periphery, not G7 basically, adopting Bitcoin as legal tender or embracing Bitcoin instead of dollar pegging, I think that you'll start to see that become a bigger trend over the next 5 years. And that's kind of the point. So if you're a policymaker in the US, do you really fear something that is going to happen when you're no longer in the job? And I think that's how they're looking at it.
According to Dave Weisberger, co-founder and CEO of CoinRoots, Bitcoin will reach 500,000 per coin in the very near future. For those who are unfamiliar, Dave Weisberger has years of experience working in the financial and equity markets, including time spent as a vice president at Morgan Stanley and 7 years as a managing director at Citigroup. It is sufficient to mention that Dave Weisberger has extensive expertise working in institutional investing markets and has a keen sense of when to make an investment. Because of this, his predictions, made in his capacity as an institutional investor, that Bitcoin will eventually reach a price of $5,000 per coin and reach the same market cap as gold, are given far more credence. In his most recent conversation with David Lin, Dave explains his outlook on Bitcoin and explains why he believes it will reach $500,000. He also explains why he believes banks will continue to fail as the real economy implodes. Keep watching to the very end of the video because I will dissect and evaluate Dave's prediction.
Between now and the end of the year, that Bitcoin will more and more delink from risk assets. I think that there is, and I do a show every week where I talk with Mike McGlone from Bloomberg. He is extremely bearish on the economy, thinking that the contraction in bank lending is going to be rippled throughout the economy and that real economy is going to collapse or at least contract. I think that's probably right. The question is, what risk assets? Risk assets that see that, but understand that a new flood of liquidity will happen in. I wonder if this is a fool me once, shame on you, fool me twice, shame on me scenario. If you go back to 2008, the end of 2008 going into 2009, the economy was under severe duress, liquidity had locked up, and the Federal Reserve started its program at that point to really try to bail out the economy. It took a long time, 3 to 6 months, before anybody who said that the stock market is going to recover from these levels would be listened to. I remember Tom Lee from Fundstrat basically being one of the only bulls in early 2009. Turned out to be one of the greatest calls in history, and his reason was that the monetary spigots are going to open again. So what will that mean? Do the monetary spigots opening again mean that a company's discounted cash flows are going to be worth that much more when they're suffering potential economic carnage? Well, maybe. Some companies, one especially technology, I think you'll see more likely to hold in there than companies that are exposed to the real economy, if in fact that scenario of a recession does come to play, and that seems fairly likely. But for the same reason, I would expect its effect on Bitcoin in particular to be somewhat muted because of the inherent value of what it means when we believe that the monetary spigots are going to get re-engineered, and the money printer go burr narrative starts to dominate again. So I think that those two cross currents bear watching. There's also one other potential failing. The reaction to that will be more monetary printing, and therefore Bitcoin as the kind of the value divisor will get more. I mean, keep in mind the market for Bitcoin is tiny. At $1 trillion and with a float that's really small relative to that one, and it's not at $1 trillion yet, it's actually a little bit below. It's a small float. It wouldn't take much. One large sovereign wealth fund outside the United States that decides to make a 5% allocation of their portfolio to Bitcoin, or even at 2%, could potentially bring Bitcoin back to all-time highs. Remember, last year, Bitcoin was trading in the 60,000 range, which is double where it is today. And what caused it to fall had nothing to do with Bitcoin. What it had to do with was people had to sell collateral. And because of the failures of Celsius and Voyager and BlockFi, and then eventually culminating with the failure of FTX, there was collateral being dumped overboard, and it was what you could sell, not what you wanted to sell. So a lot of those people have started to reaccumulate what they had sold. But the fact is, there was no fundamental reason for Bitcoin to fall when this happened, other than the fact that it was the collateral that was liquid enough to sell. As that reverses, there just isn't that much overhead supply between here and all-time highs. I think at that point, we'll have to see. So what have I called for in multiple places? I've called for, I say we're in a trading range between like the 28-ish range and 32. The next range up is between like the 30, high 30s and the low 40s. And this is just the inverse of what happened a year ago. Basically, if you look at what could 23 inverse, basically eliminate or reverse all of the falls in Bitcoin. We're not talking about anything else now from 2022. The answer is yes. And it looks like the macro scenario is constructive for that. Could it go beyond that? Well, that's going to depend on all the other factors that we've talked about. But I think it's worth mentioning that. At Money Center Bank, you're regulated by the Federal Reserve, by the Office of the Comptroller of the Currency, by the SEC, by the CFTC, by the FTC. You also have the Treasury Department looking over what you're doing because you're a too big to fail institution. These people have enormous regulatory, compliance issues. And so the idea that they would ever invest in crypto on their balance sheet, when we just saw and are seeing banks, for example, just the ability to have deposits from crypto holders, from crypto exchanges, is considered to be risky. And the various regulators have said this. They call that risky. Directly owning it is definitely off the table right now. Now, will that be the case forever? Absolutely not. Is that the case today? Absolutely true. Is it the case in other countries? Well, that's an interesting question. I think you may very well see it as a treasury asset in the next 2 to 5 years, but it's going to start elsewhere. It will not start in the United States. I mean, treasury is for companies that are a bank, where it will depend. The most important thing when banks look at treasury is capital requirements. So, for example, if you have treasury bonds, you take almost no haircut. That is considered good collateral for everything that you do. If you buy real estate, that is haircut dramatically. If you buy crypto today, it's haircut almost 100%. You almost get no value for it. So as long as the capital requirements as what's good collateral are the way they are, it's not even part of the conversation. Now, that's not true if you're an asset manager and you're recommending portfolios to your clients, where you've recommended historically 5% in precious metals or something like that in what's called the 60-40 portfolio, whatever the nuance between bond and equity weights and precious metal weights and alternative investment weight. Bitcoin has yet to enter that conversation in a meaningful sense. And there's a lot of money there. That is where I expect to see it entering the conversation more and more. And it already is in countries outside the US, and it's starting to gain some traction in the US. But that's far more than what a bank can do, because banks will be the last place, and that's because of capital rules. I think that there's a couple of long-term processes at play here. One is Bitcoin today trades like an option on its own future adoption. So I mentioned, just throw off some numbers. 20 to 25 is the times, 20 to 25 times appreciation is what Bitcoin would have to be to reach what I would call digital gold status, where it starts to approach the market cap of gold that is considered the monetary value of the metal as opposed to the jewelry value of the metal, okay, and the industrial value of the metal. That is a very big move. So effectively, Bitcoin trades like an option on its own future adoption. My favorite chart as to why I'm so incredibly bullish on Bitcoin, you can pull this one up thanks to our friends at blockchain.com, is the hash rate of the Bitcoin network on the same page as the price of Bitcoin. And you see an enormous divergence over the last 6 months. To me, that's a very big deal. And long term, that divergence will get fixed. Either Bitcoin's price will start to rally or the hash rate will start to collapse. I believe the rally scenario is much more likely. But the real issue is, as gold over the period of 70 years demonetized silver, because it was much easier, particularly post-Federal Reserve, it was much easier to trade in gold as the dollar started getting devalued. And everyone knows that since 1913, the dollar's lost 98% of its value vis-a-vis, just purchasing power. Gold demonetized silver. Gold and silver in the earth are at 15 to 1, basically, a ratio in the earth's crust. And that was a ratio that existed for thousands of years between the value of both metals. In the more modern state, over the last 200 years, that has gone away. And for the most part, gold's increase in value, even today, it's still within a couple percent of its all-time high. Silver is 50% of its all-time high. I think there are many of us that believe that Bitcoin will start to eat into gold's monetary value over time. As I said, it's 1/20th the SOP market cap right now. So you wouldn't even notice it in gold. And therefore they can move together for a while. But at some point, you might see an inverse relationship there again, but that would be at much higher price levels. But I do think that the store of value narrative for Bitcoin is important. And that's why over the last 3 months, we've seen it react more like gold and less like just a risk asset, even though it trades like an option. And even though 4/5 of Bitcoin volume is in derivatives and not in spot, which tells you a lot about where the marginal buyer can come from on any given day. The mining difficulty increases certainly have an impact on hash rate, but the real thing about hash rate is who feels that a long-term investment in the ability to provide validation for the Bitcoin blockchain and the block rewards that they will get makes sense. And so it's extraordinarily bullish long-term in terms of the network, the overall ability of the network to process new demand. There are other metrics on the blockchain as well in terms of new addresses, transaction uses, the profitability of addresses, the amount of addresses that are long-term holders, indicating there's no real difficulty in supply in terms of investability for new investors, which means new investors will drive the price up. There are lots of metrics that people follow. But the hash rate is probably the single best simple answer for the health of the Bitcoin network. The easy way you can look at this is if you look at the chart over the last 4 years, you'll notice a massive fall when China banned Bitcoin mining, followed by a relentless monotonic trend upwards since that point. So since China banned Bitcoin mining, the strength of the Bitcoin network, its vulnerability to attack vectors has become, well, the vulnerability has gone down, the strength of the network has gone up. And that should be a leading indicator for price in a long-term lens. In a short-term lens, we're looking at a world where risk assets are under pressure because of rate rises. And so it's going to trade a lot like risk assets. Eventually that delinking, I believe, will happen. I just think it's a bit premature at this point.
Do you consider $500,000 to be an acceptable target price for Bitcoin? Please let me know in the comments. Anyway, folks, I hope you all enjoyed today's movie and found something useful in it. I'll see you all at the following one.